Well, we are live again on today. So excited to be with you on today. Listen, today I'm going to talk about what's going on again in the market, referring you back to things that we shared on yesterday and the day before, but we're going to look forward. We're going to talk about all the things that's impacting the market, but we're also going to talk about sectors that absolutely are going to do better in the short term, how things are going to turn around in 2022, because I really do believe we're headed for something real good. So we're going to talk about that. Now, in order to get started on today, I, of course, have to start by looking at where we are. You know, we are 1 hour away from the close of this market. And I want to just say this to you as I'm going over these numbers. Like right now, we see the Dow Jones is down 1.27%. Typically in the last hour, things accelerate. So a lot of times when we're seeing a negative at this level, it will pick up speed in the last hour. You'll either see a rapid purchase or you'll see rapid sell-off in typically the direction that the market has been trending during that day. So we could see by the time we officially close today, these numbers could be a lot worse than this an hour from now. But as of right now, we're down 1.25% in the Dow Jones. The S&P 500 is down 1.76% or 79.17 on the day. The NASDAQ is also down 2.65% or 375.68 on the day. None of this is good. And the Russell 2000 is down 1.27% or 26.08 on the day. None of this is good. I want to look real quick at what's going on as far as advancers and decliners. If you've been watching, this is what we get started with today. We're going to go a little different direction a little bit, but decliners are 67% of the stocks. 30% are advancing. Now, this morning when the markets opened, these were reversed. We were seeing a lot of green, but just like we expected from yesterday, we had a continuation on a response to the CPI number being hotter than expected. We're seeing consistently stocks below the 50-day, 63%, 64% below the 200-day, and volume is a little lower than average for 77% of the stocks. The sectors on today, we only got 3 that are in the green and only 1 that I would really count, and that's energy. The other 2 are so close to zero that when you look at the actual companies, you're not seeing much there worth really reporting. So technology is at the bottom on today. When I look at energy at the top, technology at the bottom, and finance is here, we're getting closer to these looking like what you would expect when interest rates begin to go up. Now, we're talking about it a lot. It's being baked in the market a lot. And so there's a lot to consider as it relates to these things. Now, I want to look at the heat map. And if you look at this heat map looks like a real red out. And there's a reason for it, again, as you looked at those sectors. But right here in the middle, you see all this green. This is technology. And when we're looking at it and we're seeing it do well, you can understand that, again, energy is going to do better, and we're going to see anything else as of right now. When we look over, again, at technology, when we come down application software, when we look at semiconductors, when we look at consumer discretionary, when we look at healthcare, not as bad in the pharmaceutical part of healthcare. We also see some decent things in consumer staples, which the numbers show that some of the areas of consumer staples were doing better than others. And so we're not seeing everything look like it's just falling apart. But we unfortunately have seen several today that are just suffering. Finance, some of them, a good portion of them, 66% or more of these are in the negative on today. And so that's what we're seeing happen in the markets as we're looking at the markets right now. Now, I want to look at crypto for just a moment to see what's going on with crypto right now. It's at 2.02 trillion. It's down 5.3% in the last 24 hours. But in the last hour, crypto is starting to pick up a little bit. This is a good thing to go into the weekend because over the 24-hour period, we were not looking anywhere near as positive a move as what we're starting to see, a mixed move in the last 1 hour. So Bitcoin is at 42. That's a considerable drop off. We were at 44 at one part of this week. Ethereum is nearing coming below 3,000 again. Our Solana is under 100. As you can see, now taking it negative over the 7-day period. These are not things that we want to see. But again, I said this to you on yesterday, crypto is so tied to equity. So when you would think that this is a total different sector of investment, what's happened now is that the institutional players, the hedge funds managers, and the whales believe when things are going bad for technology stocks, growth stocks, they also believe this kind of fits in that same frame, and they begin to sell those as well, moving money around and off the board in these markets. And so this is what is happening. Now, I want to read something to you today that I think is going to help us get a little bit of a perspective, because I really do believe we are being set up for something that's going to be good. And I think you've got to frame your mind to see all this stuff that we're seeing, but understand what's really coming. And this kind of speaks to it better than anything else I could say. So this paragraph beginning here, since the beginning of the earnings season, fourth quarter of 2021, the earnings per share has been revised up 4.3% to 53.48, which is a positive 26% year over year. The 2022 EPS has been revised up 0.6% at 224.90, which is up positive 8% year over year. JP Morgan's Drubakov Lakos Bujas wrote on Thursday, looking to the following year, 2023 EPS has been revised up 0.7%. Now we're talking about the S&P 500 consensus annual EPS. It's been since the beginning of the earnings season at 247.54, or up 10% year over year. Now this is very, very important. Now, this may be surprising development considering labor shortages, supply chain woes, and other pandemic-related disruptions have led to higher costs, which have been on display in the eye-popping producer and consumer price index report. But let's keep seeing this. However, corporations have been able to offset these rising costs through operating efficiencies, operating leverage, and price hikes. This is what you hear some in Congress are arguing about, that the companies are actually using this talk of supply chain and inflation to raise prices unnecessarily. So they've raised prices. It's why profit margins have been high. When you're seeing these earnings reports coming in, these companies are doing better than what would be expected under normal circumstances. It's why analysts expect profit margins to remain high in the quarters to come. Listen, when the profit margins remain high, what is the profit margin? The profit margin tells you how much the company is net income for every dollar of sales. So when we're seeing the profit margins be high, it is telling us that we can expect these companies to be doing better, though there is so much fear and uncertainty and doubt regarding the interest rate increases. Because these companies have actually positioned themselves properly to be able to deal with these increases, they're actually in better shape than what it feels like in the country. Now, it's definitely the case that consumers and businesses aren't thrilled to be having to pay up for their goods and services, but for now, they have the capacity to pay. Now, I'm going to just go a little further in this because there's some things in this that's important. Just this week, Coca-Cola, Pepsi, and Chipotle were among companies that said consumers were paying for recently implemented price increases. Now, the question is whether they are warranted price increases or simply testing to see whether or not we can increase them in the current climate. Right now, companies are increasing prices so they're not losing money, which keeps investors ultimately happy. When this sentiment really catches on in the markets, I'm telling you, there's going to be something very, very positive that's going to happen. Now, let's read on. The good news is all of this inflation may soon cool off, with the Federal Reserve signaling its willingness to take aggressive action to contain inflation. Indeed, BOFA strategist Savita Subramanian wrote on Monday that the Fed's effort to fight inflation represented a net positive for corporate earnings. So they're going to raise these interest rates and corporations are going to do better than what you may have expected them to do. I'm saying this to you because I want you to really get this in your mind, and we're going to talk about something else that I want to show you. But I'm saying this to you today because I want you to prepare yourself. If you're watching this program on this channel, prepare yourself for a good bullish time that's going to really be launching. Now, I believe when you look at some of the actual stocks and their values, you will see that these stocks' values are based on the perception in the market. It's not based on the numbers. The numbers do not say that it should be this bad. I'll give you an example. When Tesla reported their earnings, Tesla's earnings knocked the ball out the park, but they also stated they expected the supply chain issues to continue through 2022. The next day and the day after, Tesla stock was dropping. But when you look at the real numbers, Tesla is actually perfectly positioned. And if this inflation gets in check and we begin to see the supply things stopping as the Omicron variant worries around the globe decrease, coronavirus worries decrease, and we begin to see the semiconductors getting things moving, the chip ending up where it needs to be, the supplies getting to the shelves when they need to be getting there, and this delay begins to lessen, I'm telling you, it could be very, very good for people that are properly positioned. Now, you can take two positions. You can take a short-term position that you can make some money during this time, and I'm going to show you that today, but you can also position yourself long-term, just like I am. I have great plays, and I'm going to go back to that in a moment, great plays that right now are undervalued. When I look at the charts for my companies, I'm in a good place because I know that I can keep loading up in these because I know I'm getting them at a great discount considering their balance sheet. So once the market wakes up, they're going to realize these are value plays. And when you're in value plays and you see that this is a value play like Apple, I understand that, wow, it's at a discount. Let me get as much as I can before everybody catches on and everybody starts to buy it, which is going to cause that price to go up to where actually it should have been while I was loading up. So this is very important. Now, I want to look at something today that I want to help you because I want you to understand this is going to talk about 10 sectors. We look at 11, but it's talking about the sectors when we look at the interest rate. When you say interest rate risk, when the interest rate goes up, what sectors based on that have the greatest typical risk? That's what this chart shows. So this chart, anything that's positive, because actually we have an inverse relationship. So anything positive is actually in bad shape when interest rates go up. And so the biggest one we see is technology, then utilities, consumer staples, consumer discretionary, and healthcare. All of those, to some degree, have a somewhat bad situation happen when interest rates go up. Now, I'm talking about short term. This is not forever because this is going to be a short-term impact. So you can see ways to make some money in the short term. Now, these are sectors that typically do well when we see interest rates. Once the interest rate increases, these sectors typically do well. It's Then we've got the comm services, materials, industrial, energy, and financials. Now, when we look at today, I showed it to you. I'm going to just go back for a hot second. Look at these sectors. You see energy there, and you see technology there. Let's go back and look one more time. You see technology, and you see energy. You see, things are lining up that way because the treasury yield, the 10-year treasury yield, says a lot and shows us a lot about where these particular sectors are as it relates to what's happening. So technology is going to have a bumpy ride. As we start seeing these interest rates go up, it's going to have a bumpy ride. But I'm telling you, that's why in the technology area, you've got to know your major players that are going to simply be undervalued. They're going to be oversold, they're going to be undervalued, and you're going to be able to load up and get them at better prices because they're going to come down a little bit more because this is going to make them come down a little bit more. Let's go even further than that. I want to look at industries most affected by this interest rate risk. Industries, all right? Gold miners. They're affected. Why? Because typically you can't get interest on gold gold doesn't offer this opportunity. So when interest rates go up, holding gold doesn't make as much sense. So people get rid of it. So gold miners typically are a risky industry when interest rates go up. Globular solar, that's a risky industry. Home construction. These are all in the short term. When interest rate goes up, people are not spending the money to necessarily go out and buy the property, and because the mortgage rates are higher, therefore they're not doing the construction as well because the interest rates are higher. Software. Then we're seeing medical equipment. We've seen this is not a surprise that this is going to happen. And real estate, again, as we said, because you've got mortgage rates and things of that nature going up. But where do they do well? Here's what's interesting. This is going to be a reverse of what we saw when COVID kicked in. When COVID kicked in, everything on the right did good. As we fix COVID, everything on the left is going to do good. And these are the places that did bad during COVID. So you're getting ready to see it reverse. And I want you to be prepared for this. It's going to reverse. So leisure and entertainment. Remember, they were just shutting down. People were not going to hotels, not taking cruises. All right, leisure and entertainment does better when we see these interest rates because now we're fixing something that says the economy is going great, and we're fixing something, and leisure and entertainment is going to pick up. Transportation, retail, metals and mining, jets, regional banks. This is big. Regional banks, interest rates more. They're going to be able to get more, less going out, more coming in when people begin to use their services. Oil and gas equipment. This is important. Let me show you this stock screener real quick again. Remember it said oil and gas? Well, there we go, oil and gas storage. What do? Today, everything oil and gas is up. You're seeing that? This is a proper relationship to where we are going in the current market. And when you see this gives you the opportunity to dig down. One of the things I like, I don't do it, but I'm going to do it today. But one of the things I like, for instance, if we talk about energy, and I click on this here on WallMine, I get to go and go in a little further and see where I actually can. See, this is integrated oil and gas. I know that we're going to be doing better. I get a chance to look down and see what are the companies that I could actually make move in a short-term area. Now, I'm going to look at some of these on next week and talk a little bit more about them, but I'm just telling you from what I've shared with you, you can see where we're looking at things that are very, very positive. We also showed you that this is the integrated oil and gas. Here we've got oil and gas exploration and production. Here we got storage and transportation. So when you go back over here, you can see them listed. Industry, here's oil and gas exploration and production, integrated oil and gas, storage and transportation. So we can see companies that are going to do well in the short term because of what's going on with these markets. I'm just telling you, there are ways to make money in the short term. Number one, it doesn't mean getting rid of your value plays. Let's go back to mine. I want you to see the plays that I'm saying to you I'm loading up on. Okay, here we looking today at VOO, one of my foundation plays. It's down 1.98% right now, and it's still happening. It's down over 2% as we're looking at it. Well, let's come over here, and I want you to see what I'm looking at. It's 404.87, all right? That's below its 50-day moving average. That's also below its 200-day moving average, all right? But it shows me, since it's now below its 50-day and below its 200-day, one of the things that I noticed is that the 50-day is not below the 200-day. The 50-day is still above the 200-day. So we're looking at that, paying that attention. But this is important numbers to watch because this thing is moving downward. We're looking at it now. It has a PE. Oh, I'm sorry. I got to get out of this 1 hour view. My mistake. It has let me go back and say that again. I need to correct that. I was looking at the 1 hour view. In the daily view, we're seeing that the 50-day moving average, we are trading below it. And again, we're below the 200-day. And so we are below them in the daily and in the hour. It shows me that the momentum is going the wrong direction. That's normal because of what happened yesterday. So I'm seeing an RSI of 40.93 going in the downward direction recently. I'm seeing the MACD look like it's trending down toward the signal line, and the on balance volume is trending downward. Now, does that tell me that this is a horrible company? If this wasn't going on this year, I'd be saying, well, I need to start watching whether I want to invest in this or not. But because I know what this is, and because I know how solid this is, a millionaire maker over time, this is an opportunity, and it's becoming a greater opportunity because it's trading below the 50-day, the 200-day. It's trading below the 13-day EMA and the 49-day EMA. And we're getting ready to see things line up just perfectly, just like what I was reading to you. Things are lining up perfectly. Let's look at Apple. Look at the Apple chart real quick. It's the same scenario that I'm seeing. The reason why I want to look at it. We are now trading below the 50-day moving average. The 50-day is 172. We're trading at 168. The 200-day, though, is 150. So we're above the 200, but we're below the 50-day moving average. We're also, as I look at this, we're trading below the 13-day EMA, and we're trading below the 49. So I'm watching their relationship. On balance volume is trending down. The MACD is trending down. The RSI is trending down. This is what's happening. So does that mean that these are horrible companies? If this was going on in a year, that what we're seeing was not happening, then I would say, wow, this is terrible, man. This is, you don't invest in that company. But I'm telling you, we're talking about Apple, and we're talking about what Apple is going to be doing and what this company is. So I know it's being set up for a bullish scenario in the market where things are going to run and we are going to see things move in such a positive direction. So what do you got to do? You have got to be wise in your movements. You can't allow yourself to be thrown off. Now, AMD is one of the biggest losers of the day in the market. It's one of the biggest losers. It is trading well below its 50-day. It's down to 112. The 50-day is 133. The 200-day is 111. It's not below the 200-day, but it is nearing being below the 200-day moving average. And so I'm watching this. Is this a horrible company? No. This company, to me, is going to knock it out the park. It's strong. It's going to be strong for Metaverse Web 3. And so, but everything in this chart is telling me things are trending downward. Why? Because of perception. It's not the company, it's perception. Now, when that happens, you just keep watching it. You can find a day when it's like, you know what, strike time. A lot of people would consider now a strike time for this because it's so low. My only thing is that I believe it may go a little bit lower because of the way it's trending. And so I don't have to fully load up right now. I could have periods where I'm going to come in as I'm seeing it drop down a little bit. And then on my way back up, I can have places where I say I'm going to take profits out. But I am suggesting to you, I know it's a solid play. Goldman Sachs is a solid play, but today it's down 2.23%. Why? Because of perception. This is a financial. This is not only a financial, it's one of the most solid companies in the area of their balance sheet. So it's also in the financials, which do the best when interest rates go up. And so I know we're not looking at something that's not going to do well this year. I'm just trying to show you as I look at these, and I'm talking this stuff, and I need to make sure that, you know, I'm going on and on and on, and didn't have that particular chart open, but I'm gonna go back and just show you real quickly. When we look at VOO in this chart, everything is trending down. On balance volume is trending down. MACD is trending down. RSI is 4111 trending down. Price is coming down. It's down 2% on the day. Is that a terrible company? No way. I showed you Apple. I was talking about Apple and didn't show it to you, but here we go. On balance volume trending down. MACD trending down. RSI is 4634. Price trending down. It's trading below its 50-day moving average. Is that a horrible company? Absolutely not. I spoke of Goldman Sachs. I spoke of it. Same thing. Trend. I spoke of AMD. It's one of the worst ones of today. And does that mean get out? Absolutely not. As I go and look at the watch list that I have in here, and I look at the ones that are the worst movers for the day, AMD is my worst mover for the day. It's down 9.99%. What do you think I think about that? I think that we are preparing, number one, for a bullish time in the markets. A bullish time in the markets. And as we prepare for a bullish time in the markets, these companies are going to do tremendous. Now, my top four are all metaverse plays that are down tremendous on the day. They're more futuristic. They're things that I'm believing for as the days go by. And we've got to be prepared for that. So I'm saying this to you today to let you know that the markets, we're having a lot going on in these markets, but there's a way to win. I've showed you the sectors that'll do well. I've showed you the industries that do well and the industries that don't do well. We're going to dig down into that a little bit next week. Now, good thing about this is that this is Friday, and we're hoping over the weekend people's heads begin to level and they begin to see the true balance sheets of the companies and realize that these companies have actually priced themselves to be in a good position, even though the question is, will people continue to spend money as money is beginning to dwindle and monetary policy shifts? Well, we're going to keep following this because I promise you, I believe in my heart of hearts, we're going to come to a bullish time. And that bullish time, you've got to be ready for it. Right now, I'm dollar cost averaging in the solid plays that I believe in. Even though, as I dollar cost average in, they're dropping. I'm not going to just not invest. I'm going to just keep going after the shares. I'm dollar cost averaging in. I do that every Tuesday. I'm not stopping. But big expenditure that can come when we really hit a bullish time to just go all in and load your boat, that's coming. And I want you to be smart about it as we continue to build, live, and sustain wealth. Well, I'm so absolutely glad to have shared these near 30 minutes with you. I apologize for not having that chart up on that screen when I was referring to it, but I went back to it for you so that you could see it on today. Listen, I want you to do me a favor, like this video, subscribe to this channel, share it with someone. I can guarantee you we're giving you stuff that's going to help you, advance you. This is a newer channel in what we're doing here on YouTube, and we're on TikTok, and we're on Instagram, and we're on Twitter, and we're trying to expand our presence in social media. And I'm so glad for every opportunity to share this with you, to add some value to your life as you move forward. Now, remember, as I close today, you cannot become a millionaire and be successful just investing in the stock market. You've got to deal with how you handle money. I've been doing a series on TikTok and Instagram and Twitter on how to become a millionaire. And I want to tell you, you can't become a millionaire unless you learn your responsibility to not let money be your master. You have responsibility to manage this money. Management is a big word, but it's one of the most critical words to being successful. Any person who cannot manage won't be successful. If you can't manage money, it's going to tell you what to do. Money is going to tell you to spend it. And it's going to tell you to buy that, this, and the other because somebody else has it. Management is a responsibility that gives you an ability to plan, to give a reason for that dollar so that that dollar gets to the place it needs to get to so that you can build the wealth you want for your life and for generations to come. Well, I'm going to be talking about that. You can come on and connect with me over on my TikTok, on my Twitter, on my Instagram. You can see that series that's happening over there. I'll make sure that that is in the description for this video that you can connect with me. There's a Linktree link there. And in that Linktree link, there's my link to all of my social media. You please go there and connect with me over on TikTok, Instagram, Twitter. I look forward to it. Well, I want you to have an absolutely blessed day. I believe in the best for us. I believe the best is yet ahead. So let's get up tomorrow and keep getting after it. Have a great day. Talk to you soon.